So welcome to my channel, and I'm going to just spin off and going to digress a little bit from my body language and face profiling content for a bit. For the next few videos, I'm going to talk about investment psychology. I've been encouraged by my inner circles to put this up because they said, hey, there's so much experience that I've gone through and I want to share it in this channel. You know, if you are one that invests in stocks or what we call equity, you know that the statistics shows 4 out of 5 of those retail, the moms and pops, lose money, and mostly the experts at the institution that makes money. I've been trading since I was 17 years old, and you know, there are some wins, but by and large, most of the time we will have an accumulated loss. But towards this last part, when I learn more about trading psychology, you know, that is precisely the icing on the cake. After all the technical analysis and all the fundamentals, and if you learn all the kinds of charts, chart reading, candlesticks, Bollinger Bands, MACDs, you know them all, and you're still wondering why you lose. I'm going to share with you some great tips on investor psychology. And if you like it, then, and if the subscriber goes up, I will continue to do such videos. If the subscriber goes down because they don't want this content, I'm going to stop doing these videos. Alright? I'm not even going to ask you to subscribe. I don't even know why people say, you know, before we start off the content, would you like to subscribe? Why would we want to subscribe if we haven't even heard your content? True? So, well, at the end, if you like it, you would subscribe. If you don't like it, then you maybe unsubscribe too. So I'm going to start off with, maybe today I'm going to give you 3 great psychological tips on investment. And we're going to start off assuming that you guys already know how to trade and have been trading, but not successful in your trading. I'm not going to teach you how to trade. I'm going to talk to you about your behaviors and why you win or why you're not winning. The first thing you need to do when you buy a stock, please identify if it's going to be a trading stock or it's going to be a growth stock. Because if it's a trading stock, you have this psychological top and this psychological bottom, and in between you trade in a range manner. But for a growth stock, especially the US stocks, you know, there are brilliant stocks that continues to go up for 5 years in a row, 10 years, it continues to grow. Okay, now you need to identify that, because if you buy a matured stock, then you're playing range trading. You would sell and buy at the appropriate ceiling and bottom. But if you're buying a growth stock, here's the tip: don't keep staring at it every night. I know it's fun and you look, is my stock growing? If you intend to keep it for 2 years or 5 years or 10 years, don't keep watching it every night, because there's a tendency, if you look at it, you feel like you need to do something. Okay, so if it goes down, you get emotional and say, should I sell? And it goes up, should I take profit? Well, for a growth stock, let it run. Sometimes it goes up, and in between, it won't go a complete straight line, it will go a jagged straight line. So sometimes you go down a little bit and then you go up a little bit. You know, if it's a growth stock, just let it run. All right, if you don't, you're going to win small and you're going to lose big. That comes to my second tip. My second tip is, if you do win only small amounts, like, you know, I hear people say things like, you know, if I could make 50 bucks a night, that would be, you know, in 30 days I'll make 1,500. So what do you do? Psychologically, you would just take a profit after you make $50. Now the danger is this: if you are willing to settle for a profit of $50 and do the trade, are you also willing to cut loss at $50 when you lose a trade? Because very often you'll be happy and say, oh, I made $50 today, I made $50 yesterday. But when you lose, you don't cut at 50 and it keeps going down, and then you lose $1,000. And you're likely not going to tell people that you lose. So most of the time people ask you, you make in the stock market, oh yes, I did, I made this purchase, I bought at this price, I sold at this price. And you tell about your wins and you talk about your victory stories, but you deep down, you know, I lost big in a few stocks, and you say, no, that's a one-timer, it won't happen again. So you try again the same strategy, and then you lose again. So okay, so be very careful. Don't try to win small and lose big. Okay, in fact, those people who constantly say, all I need is a small passive income of $50 a day. You know, that is so dangerous, because at the end, if at the end of the trading day and you don't make that $50, you start to take risks on trades that you shouldn't be doing. Okay, so you start investing, like let's treat it like a casino. So I'm going to punt on black and red, and then you lose your money. So instead of saying I'm going to make $50 a night, you should be saying I will be making $15,000 a year. That gives you a lot more runway to take your time to make money. So you may not make money for 11 months, but then finally, you know, the one that you have bet on finally ran in December, and you made that full $15,000. Okay, so don't give yourself unnecessary pressure and impossible targets like $50 a night. My third tip for you today is, you know, very popular stocks are often overbought. Too many eyeballs are on it. I'm not saying they're no good. Popular stocks has its advantage. It continues to rally for a long time because more and more people want to get some skin in the game. So for example, a good stock, if you have bought it early, would be something like Tesla. It's a great growth stock. If you bought it early, I was informed about Tesla when it was 60 bucks. Someone from America told me that, you know, Tesla is going to start launching their cars, and their first test bed is in California, and that's great. But they had plans, and they said if it's successful in California, then they will go up to another 50 states. So that's like 50 times growth. And if that's successful, then they go up to 50 countries or even more. So you can imagine that jump. But right now, Tesla is already in all those countries, and everybody knows it. I'm not saying it's not a good stock. It's highly recommended again, but I'm saying that you can't get that 20 times win again. I don't think so. So what I'm trying to say is many of the popular stocks that you talk about, that people recommend, very often you see the PE is very high. Okay, so I like to look for stocks that are diamonds, that are gems, that are underpriced, but they're not glamorous, they're not on the news all the time. I call that strategy, diamonds are not found on the surface of the ground. Diamonds are found when you dig very deep and you take your time to look for it. Eventually, you find a diamond and then you make. How's that for the 3 tips for you today? If you like the content, give me a like. I don't usually ask that, but give me a like, because it tells me whether I should go back to face reading and body language content, or I can continue to give you another 20 or 30 of these psychological tips. It's also part of human behavior, and I found out that after I found my own trading temperament, I made money. So 4 out of 5 people lose money, 1 out of 5 make money. I make money in the stock exchange. So if you would like to hear more about my strategies, give me a like and I will know which direction I should go. Christian Chua signing out.